Hey guys, how's it going? This is Green Guy with Green Guy Finance, as my handle is on Twitter and StockTwits. Coming at you with another market video. Going to make a couple changes. For those of you who have been watching this, you know that usually I go into a little bit of an educational explanation, but I'm getting some feedback from some of you that you would like to see a little bit more meat and a little less of the potatoes. So I'm going to start doing that looking forward here and seeing how you guys like it. Try to keep the macro to 3-4 minutes max. Especially on a day like this, I think there's quite a few stock stories that absolutely must be discussed going forward. One of those was Netflix After Hours, if you missed it. I'm going to go through a couple momentum comparison charts so that maybe we can get an idea of things to look forward going in that entire group of stocks and their valuations. But let's talk about the macro here first and then get into that in a couple plays of the day as they happened. So this, we're looking at the intraday volume on the S&P 500. God, it was just an insane day, huge price swings, and I can tell you, I had a couple scalps, but in environments like this, I am happier taking a safe gain than a monster gain. And some of these options guys, I think, are getting a little slap happy with themselves. And I know somebody who's a big Twitter guy who scalps the S&P 500, and he lost a lot on Netflix calls going into the after hours. I don't know what the heck he was thinking. This is the environment to be defensive, not aggressive. If you're gonna get a big winner, it should be a scalp that turns into something bigger, and not because you're writing out a loss that you think is going to go and turn the other direction. This is not that world. You have to be very careful because this has been an insane marketplace to be a trader in. Can't emphasize that enough. Russell, as we've been talking on these videos for the past couple days, has been changing. It's been more positive and a better performer than the other major indexes. It must be kept in mind moving forward that this, although it's been outperforming, has a downsloping 200-day moving average, making it a technically bear market index. The S&P 500 and the Dow have not achieved that yet. So you must keep in mind, or at least follow somebody that follows the indicators and alerts you that when the S&P 500 200-day moving average turns downward, you must be aware of that, because that could be a huge indicator for a sell-off in the market. Cannot emphasize that enough. That's what a lot of people that are in the institutions use as an indicator for a bear market, technical bear market. So they will consider this as no longer a bull at that point. You will see the changes in the plays and everything. You must be aware of that. Absolutely cannot overlook it. Looking at other things today, let's look at the safety plays here, where money was buried, it looks like, was gold and treasuries. Treasuries still moving insanely at unprecedented levels. I don't want to call a top in either of these because I don't know if we're going to go back into a bull or a bear market at this point like a lot of people. It's yet to be decided. It's what the market allows us, and there's nobody in the world that should be able to make a great call in either direction. You must be reactionary and not vice versa in this environment. Looking at the major sectors in the plays today, XLF is one I would keep an eye on moving forward for a couple reasons. One, it is one of the hugest components of the major indices out there. XLF and tech are the two biggest components, but the biggest thing here is the XLF still has a positive 200-day moving average, and Goldman Sachs reports. So watch JP Morgan, Goldman Sachs, or follow somebody who does, but you must be aware of what's happening in the financial sector tomorrow if you want a good idea of what's going to happen to the other indexes. It'll be closely watched. Trust me on that point. You must keep an eye on the financials looking forward here. Quick look at the Russian index, the RSX. Seems to still have found a good bottom here, even though it had still below that trend line we've been pointing out. But it still looks like it's a value play until proven otherwise, is what I would call it. You have to have stops on everything in this kind of a marketplace. So if you buy anything, you must have a stop on it in case we get ugly. If we have a day like today that stays down and doesn't bounce back, that could happen. U.S. oil, still looking downward. We might have bottomed. It's getting close, I think. Hard to tell with a lot of things, but when commodities start bouncing back positively, that could be one indicator that we're coming out of our macro funk, or market funk. But let's look forward here at a couple of the plays here. I wanted to look at the 3-month chart for most of the momentum names that I've been following here, and there's quite a few as you can see, but these are 16 names that I like following because they're good indicator and optionable plays with good liquidity. For the most part, Triple D sometimes less, definitely Stratasys sometimes less. But either way, let's stay focused here. The point is, the number of charts that have broken out of trend is is getting scary. Stratasys, Triple D, Baidu has broken out of Amazon. You've had Facebook break out of trend, and now here Apple here today broke out of trend again. You have to keep these things on your radar because the trend, the trend with the trend is we're breaking out of trend. If that's a quotable, quote me on that. But the things that have stayed in channel, like Pandora, things like that, could have some very nasty kickoff selling going through this, because the pattern that's been happening is if you have something break out of its channel, it's been doing so very violently, people, because we're in uncharted territory. You have to keep these sorts of things in mind going forward. The other thing worth mentioning is the more charts that break out of channel and just are sort of trading, floating here, watching the macro, hoping to get back to channel, that's indecision. And you have to keep a retail investor in mind at this point. They do not like this chop whatsoever. If you're in that bag, you are very much like what they are thinking. They're waiting for things to settle down before they buy back in, which is why a lot of people think we're not going to see a 2013-ish pattern rally, not a V-shaped rally out of this like we're used to. So we might see a very slow rally coming out of these things, so a couple green days before people feel safe enough buying again, because prices have been that insane. And although the values are starting to pop out, people are not feeling safe. Can you blame them? But that's something to keep in mind going forward here, is just that we are going to have to have some sort of stability. Not only does the price have to be right this time, but we're going to have some stability before we move forward in a very greenish pattern here for the upcoming days. Let's take a look at the chart plays here today that I had. A couple of those that I was looking at early in the markets, what I'm going to show you first here. Apple should definitely be on your watch list for one good reason. And I've been saying this in the videos, and I've been saying this on the social media sites. It is a great great corollary for the markets. There's one play today I made that I'm going to show you here real quick, which is there was a double bottom in Apple here. As you can see, one touch, two touch support, bounced off. That led to an easy in on the SPY 500. Correlated instantaneously. That was all I needed, and then it was a buy. You can, if you're going to play the indexes, it sounds insane, but Apple's a good way to look at it because it is so liquid and so tied into everything and so sensitive, and there's so many professionals that are factoring in so many things, that Apple is a good thing to look at for everything. Even if you go back here and look at, this was a double top type pattern, and going back and look at the S&P 500, same thing happened there. It's been doing that over and over and over again. So keep that on your radars. Absolutely keep that on your radars. Moving forward here, Apple's an easy way to make money if you use that as a corollary. Prudential, I would make a note here. I thought it was going to be a decent value play today. There's a lot of insurance names that are looking pretty well, that they could have value buying kicking in. Prudential did not show strong buying pattern here today, intraday, so I'm taking that off of my watch list for the time being. Caterpillar, though, was looking at it early in trading here today as a positive moving stock. It had a huge sell-off instead early on, so I didn't have a position on this today, but it had a very positive reaction at the end of the day. So looking forward, I would definitely keep Caterpillar on my value buying list for when things start to turn around here. Micron had an upgrade, did make a nice 40% off of a call play on Micron here today. So there's money to be made on the upside. You just have to be very careful and and very very realistic with how much you can make if it's a bad day. So your scalp is what these ended up being, but they could have been nice runners had we had a green day, like many people were expecting here, because we haven't had a really positive greenish day on the major indices in a while. American Airlines, I love this play, and I'm looking forward in the long term. I bought and I sold out of it in the same day again, just because I had a 20% gainer on my options off of this, but I would have been happy holding this for a week and a half. I sold out because two things. There's going to be an airline reporting tomorrow in earnings. I didn't want to be caught if that was a negative corollary for this, bringing it down. And the other thing is, after looking at the major indexes again, I'm not 100% sure which way we're going, bull or bear at this point in terms of the macro. So you have to be a little careful with your picks here, but American Airlines could easily be a value play coming out. Now, moving on to the major fireworks of the day, Netflix. Netflix, after hours, had a 25% sell-off. I'm going to repeat that again, 25% sell-off. Currently, I'm looking at it here, and it is 7:12 Central Standard Time. We're at 3:30. It's basically been in that 3:30 to 3:39 range since it happened. So now, not a whole lot of buying occurring in the aftermarkets at all. You have to be a little careful looking forward on the momentum names. It has big implications. GoPro after hours seemed to react very viscerally immediately to that news. And I think it could be contagious for a lot of momentum names. So let's take a look at that. First thing I want to point out before I go any further is how I'm going to be looking at a couple names here going back is let's take a look at, we are currently at the 330 level. The last time we were at that level was back here on your charts, which was back in May. So I'm going to take a look at just what other momentum names were at their valuations back in May in comparison to Netflix, because the easy thing to do is we're at that May level. Let's see what everything else is valued at currently on a comparison chart and then on May on a comparison chart, all in the same thing. So let's take a look at Pandora, because it's a good way to get an idea of what everything else is, because Pandora essentially is at its May valuations. Going back on the charts, this is the price essentially of what it was back in May. So I'm going to do that. On the right here, you have the percents of movement that have happened since May, looking backwards. And let's go through the colors here on your chart. Let's start at the top here. White is LinkedIn. The yellow is Facebook. The pink is Apple. The dark red here is Zillow. Of course, the price action is actually Pandora, like we stated. And then the blue down here is Angie's List. So, of these names, what's really screaming out to me currently is that LinkedIn is still at about 30% higher than it was back in May, even though it's essentially, in a lot of the momentum names bags, similar situation. It's not a Facebook where it's making fantastic revenue, but it could fall heavily here. And I think also, let's take a look at another names that you might like that are smaller than, of course, that group in terms of their market cap. But let's take a look at Workday. Workday is the price action indicated by the red and the red and the greens. And then white here we have Splunk. And the blue here is Autodesk, going back to the same time frame there on the charts. And what you can see is that Autodesk is still overvalued in the same manner, essentially, that LinkedIn is on the other chart. So I would be keeping those two stocks on a very, very, very high watch list, because it could possibly have a correction. Tomorrow could be an enormous day for a lot of these names just based on what happened in Netflix here today. And it could just be that simple. People could just freak out. This could be that sort of a thing. That is how big that news could be. Let's take a look at some things that seem to have bottomed, might have some value, things we could buy. GoGo has a very nice line here. Let's go back as far as we can. So we're looking at, let's see, a year chart of GoPro here. And what you can see is that it's sort of never really jumped off its bottom except going back in December there, but it's maintained its bottom. So it's a very safe valuation. I like the stock a lot, and it doesn't get enough attention. It has 10-year contracts with the airlines, and it seems to me that this could be a nice value play if we stay in a bull market. Let's look forward at Priceline. Priceline may have bottomed here. The channel is still in on Priceline. I would watch if Priceline breaks. It could be extremely nasty, but I don't. At this point, it's hard to imagine it will, but I'm still in a bull market mentality, I think, with this stock, like a lot of people are. So Priceline here might have bottomed. If it does go lower by much, you see the trend line there? If it does go lower by much, I think we could have a very nasty day for Priceline. Same story with Zillow, similarly. Zillow seems to have found a bottom, just like Priceline has. On a very ugly day like this, for Zillow to perform as well as it did is saying a lot. Zillow was very comparable to the Twitter performance today in terms of its intraday and how many supports it broke for the pivots based on volatility. Let's take a look at BlackBerry here, and I've been a little bit mixed on BlackBerry recently, but BlackBerry does seem to have found a nice support line to jump off of, so I am just going to set an alert, and whenever it hits about the 880s, 870s, I think would be a good time to buy BlackBerry if you're interested. Same story as everything. We need to know what kind of a marketplace we're in before we start buying these huge dips. Yahoo is another thing, just based on the news, potential takeover rumors that's been out on that. I would keep it on your watch list. Ford, same story. This is Ford and GM on a comparison chart. Those might have bottomed as well. Well, guys, that's all I got for you. I hope you enjoyed the video here. Feedback is always appreciated. Luck tomorrow.